Hey everyone, welcome back to my channel. My name is Cara Fiano and I'm a local real estate broker in the Asheville region with Mackey Realty. This video is part 2 of my June housing market update. If you missed part 1, I'll leave it linked up here. I released that video about a week ago at this point, and I went into a really big deep dive on the local real estate market, looking at median sale price, average sale price, days on market, comparing statistics like single family homes to condos and townhomes, looking at countywide data, month supply of inventory, a whole bunch of data. It was a really in-depth video. If you are local or contemplating moving to this area, I highly recommend watching that video. The reason I'm doing a part 2 is, if you saw that video, you know that I was locked out of my everyday computer and basically lost all of my data. And so I thought at the time I would not be able to access it again, but I have really good news. I was able to get back into my computer. It's a really long story. I actually had to reach out to my old college from like 15 years ago and have them re-establish my old email, and it was this whole long thing. I'm not gonna share the whole story, but basically, long story short, was able to get back into my computer. I have all my data again, so I have all of the national data that I didn't really want to go to waste, and I thought I'll just do a part 2. That's enough rambling. Let's dive into today's video. Home price growth hit its lowest level in the past year, increasing by only 3.4% year over year in March. This is the lowest recorded annual growth in the past 12 months. In terms of what prices might do going forward, experts are now predicting that home prices will increase by about 2.9% by the end of this year. This is lower than the previous forecast of 3.4%. Home prices are expected to continue appreciating in years to come. Even though we've continued to see home prices increase, competition has been cooling. In April of this year, there was an average of 2.4 offers for every home sold. This is compared to an average of 3.2 for last April. In addition to this, 18% of homes sold above asking in April versus 27% in April of 2024. To go along with this, 18% of listings in April had price reductions. This is the highest share for the month of April in records dating back to 2016. To give you an idea of how quickly the market is changing, last year in April, only 2.5% of homes on the market saw price reductions. You're probably noticing a trend with these different statistics, that being that home prices are continuing to increase just at a slower pace. We're not actually seeing big price decreases on a national level. Competition is still there. You can find properties that are going to have multiple offer situations. If you go and watch the video I put out last week about local data, you'll see a pretty similar trend there as well. Ultimately, home prices here are stabilizing and we're not seeing any huge price declines. That being said, if you look at homes listed on the market, you will see price declines becoming more common. I believe that insurance costs are going to be a topic of conversation that we're going to hear more about throughout this year and into next year. According to Zillow, since 2019, insurance premiums have increased by 38%. During the same time period, home prices have increased by 50%, while homeowner income has increased by only 22%. If you've been following me for a while, you know that month supply of inventory is a statistic that I really like to focus on because it gives us a good idea of what type of market we are currently in. So on a national level, month supply of inventory is currently 4.4. This means on a national level, we are still in a seller's market. If that number is 6 or below, it's considered a seller's market. A little bit of a spoiler, there is actually a county in the Asheville region that is currently in a buyer's market, and a few others are in neutral markets and trending towards that buyer's market territory. But let's stay on track with national data. So in May, there were 17.2% more homes for sale than there were a year ago. Inventory has increased for the 5th consecutive month and is now reaching levels we have not seen since October of 2019. This means that inventory is finally up to pre-pandemic levels. This does not necessarily mean that we have a huge oversupply of inventory. It really just means that we have a more healthy supply of inventory, because the amount that we saw basically over the past few years was historically low inventory levels. And so now we are getting to a more healthy level. Days on market has been increasing, and we're currently seeing this number around 50. Interest rates haven't done a whole lot. They're still averaging around 6.8%, but Fannie Mae and the MBA have updated their predictions, and I definitely think they're worth taking a look at. Fannie Mae is now predicting a more aggressive drop in interest rates to around 6.1% by the end of this year and 5.8% by the end of next year. The Mortgage Bankers Association, on the other hand, is taking a more conservative approach and is only predicting interest rates to be around 6.6% by the end of this year and 6.3% by the end of next year. These numbers do vary quite a bit, and I wouldn't focus so much on the exact number as they do change pretty much on a month-to-month basis. However, I would look at the general trend. So both Fannie Mae and the MBA are in agreement that interest rates will likely decline through this year and into next year. Of course, anything can happen and the economy can be somewhat volatile, so keep your eyes out for more updates on this. As of now, it seems that the Fed will probably not cut rates until September at the earliest. I've talked about the lock-in effect in past videos, but it's been a little while, and I read this statistic that I thought was very interesting, and I would like your opinion on this as well. As a quick reminder, the lock-in effect basically states that some people would sell their properties, but they feel locked in to their current interest rate that's maybe in the 2s, 3s, or 4s, and they just can't justify selling their property, giving up that really good monthly payment to jump into a higher monthly payment on a new property. So a Realtor.com survey that was completed in April found that 61% of home sellers have thought about selling their property for at least a year or more. However, 55% of those people felt like they were locked in and couldn't actually sell. I think this is a really important statistic to focus on because it shows that there are a good chunk of people out there that would actually sell their properties, but they just feel like interest rates are too high right now, and the discrepancy between the 6.8% interest rate, for example, that's typical right now is just too high compared to their, let's say, 3% interest rate that they currently have on their home. So if we start to see interest rates drop into the 5s, maybe into the 4s, though I don't really see that anytime soon, but even into the 5s, I think that we will start to see people come off the sidelines and list their properties. We are seeing inventory increasing, and part of that is because we're seeing more new listings, but another reason for that is because homes are just sitting on the market for longer and allowing inventory to build up. I am really curious, if you are currently a homeowner, what is your current interest rate? If you don't mind sharing, leave it in the comments box down below. And have you thought about selling? And if you have, is your interest rate currently a hindrance? Is that ultimately your biggest reason for not selling? Very briefly, I'll touch on a bit of local news. In my last video, I mentioned this, but I'll share it here too. Chimney Rock State Park has actually just reopened today as I'm filming this on Friday, June 27th. It is now officially open. However, it is by reservation only. They don't want a flood of people coming to the area, and basically the infrastructure is just not there, not ready for that just yet. But the park is open. They do want people to come and enjoy the area again. So if you have gone there, let me know, leave a comment down below. I'm planning to go at some point, maybe in July, but not this weekend and not next weekend, not 4th of July weekend. I'm sure that'll be packed. But if you have gone, let me know how it was. I also recently read that the owners of the Battery Park Book Exchange and Champagne Bar are planning to retire, and they are looking for new owners to take over their business and continue it as it currently stands. That's a favorite place of mine. If you are a reader and you're interested in unique books and just beautiful books, basically, it's a really cool place to go hang out. It's right in the Grove Arcade area. It's just a really cool spot. So I do hope that they find new owners. It would be sad to see that business close. All right, I have one more statistic for you guys, and it is another Realtor.com survey. It actually found that 69% of Americans do not plan to enter into any sort of real estate transaction within the next 6 months. Interestingly, 63% of people said they're waiting for interest rates to drop below 5% before they would consider buying. I am curious if you are someone that is considering buying a property, but you feel like now is just not the right time. If you would share your reasoning, I feel like that would be really interesting. Are you waiting for interest rates to drop below 5%? Are you waiting to just save up a little bit more money? Or basically whatever your reasoning is, I feel like that would be really interesting to know. So if you're open to it, leave a comment down below and share that. We could have our own little survey in the comment section. Another interesting part of the survey stated that 23% of millennials plan to start looking to purchase a property in the next 6 months, which was up from 15% in September. To wrap up this video and to give you a high-level overview of the market, I am seeing both on a national level and local level, I'm seeing the market move away from a seller's market and closer to a neutral and buyer's market. As I mentioned earlier, there are already some areas locally that are in true buyer's markets, and there are others that are actually in neutral markets. So we are starting to see prices stabilize, inventory increase, days on market increase as well. It's going to be really interesting to see how this changes throughout the year. It has already changed a lot just in the past 6 months, and I will certainly be continuing to share more statistics and data with you guys. As I mentioned earlier, I highly recommend going and watching last week's video as I go into so much local data, and I definitely think that would be valuable for you to watch too. Next month in July, I'll be going back to my usual, one housing market update video a month format where I share national and local data in one video. But I did also want to ask, if you did watch last week's video, do you guys like that format where I basically showed my screen and did like a deep dive on local data? Or do you like this type of video more, or do you want me to do both? Let me know what your preference is and I'll consider that for next month. But that is everything for today. As always, if you'd like a copy of my home buyer guide, feel free to reach out and I'm more than happy to share that with you. And if you are a homeowner who's contemplating selling your property but you're not sure what it might sell for, feel free to reach out to me and I'm more than happy to do a comparative market analysis for you, and I can share some tips for some upgrades that you might want to do before listing your property so that it can sell for top dollar. So if you have any questions, reach out to me. Always happy to help. Don't forget to subscribe, hit that like button, share this video with your family and friends, and I'll see you very soon in the next one.